What would it take for a $7 billion Bitcoin? Because this is possible. I've brought on the man with the math behind this astronomical price per Bitcoin. Peter has spent over 3 decades of his life as a traditional financial advisor. Peter, you have a thesis behind this wild price. Listen, let's get straight into this because most people will think a $7 billion Bitcoin is impossible, but you have a thesis and a framework backing up the maths. Let's start by explaining why there might be little to no Bitcoin on exchanges in the future, and then how this could lead to that $7 billion Bitcoin.
Sure thing. Well, thank you for having me, Sean. I'm excited to go through this with you. I like thinking about it from a thought experiment perspective, and obviously the number is what comes out the back end. We are in the first epoch where we're actually seeing Bitcoins coming off the exchange. So more Bitcoins are coming off the exchange than going onto the exchange. So when you're looking at determining price, it's really, there are only 2 things that go into any price, and that is fundamentally supply and demand. So how much demand we have, how much supply we have, and this is where, when those two meet, we basically get a price. So in order for the Bitcoin price to go up, basically we need to see Bitcoin come off the exchange. So there needs to be less supply available. And this is where, when you have a hard cap of 21 million Bitcoin and there's only 21 million, then all of a sudden we have a hard cap of 21 million supply. And to think that we haven't mined, 1.5 or 2.5 million, 1.5 million left to mine, and then there's 4 million lost, there's 1 million tied up in Satoshi's wallets, 75% of the entire supply hasn't moved in over a year. And when you couple that with the fact that more coins are coming off the exchange than going onto the exchange, and this is the first time in Bitcoin's history that that's happened, the trend is quite inspiring, that all of a sudden we're seeing coins come off the exchange for the first time over the last 3 years. And now my assumption is that this trend is going to continue, and we are going to get to a situation sooner or later where no one is going to want to leave their coins on exchange because it represents an existential risk to you holding your Bitcoin. So from a supply perspective, my expectation is we're going to see over time more and more coins come off exchange. This is going to be fueled by a number of things. Firstly, the exponential increase in Bitcoin's price is going to mean that the holders of Bitcoin now are going to have to sell fewer and fewer coins to meet their physical needs of what they want to do with their life and how they want to spend their Bitcoin. So if you have 100x in your Bitcoin, you don't need to spend 100% of your Bitcoin. You might only spend 10% of it, and you're still living a rockstar lifestyle that you never dreamed of. As the price of Bitcoin continues to increase, you end up having to sell less and less. So that's the supply side of things. My expectation is we're going to see more and more of that. The other side of things comes from demand, and this is about education and really understanding what Bitcoin is. And sadly, it took me a very long time to really understand what Bitcoin was. And I didn't understand that Bitcoin was the best form of money ever invented. For the first time in history, we have a single asset or a single thing in Bitcoin that is the best function of money, or the best. It basically takes the 3 functions of money and is the best at all 3 functions of money. So if I look at those functions of money very briefly, what are they? It's store of value, there's mean of exchange, and there's unit of account. Now, those 3 functions of money are basically dominated by gold, takes up store of value. Mean of exchange is dominated by the US dollar, which accounts for 83% of global trade and $100 trillion market cap. And then there's unit of account, which is dominated by our double entry ledger system, basically a form of accounting, how we actually account for all of that. Now, that is a $2,000 trillion market by my estimation, but put in whatever number you want to. Now, for the first time in history, you now have 3 functions of money competing for one single asset. And all of a sudden, this makes the return profile for Bitcoin an exponential return rather than a linear accretion of value. And the world doesn't know this yet. And this is where you and I are very fortunate that we're on this call and basically get to discuss this and think about, well, what happens when the rest of the world figures this out? And what I find really amusing is that money, and to quote Zig Ziglar, a famous sort of sales educator in the US, basically he said, money is not the most important thing in life, but it is damn near oxygen. And this is where, when Bitcoin is the best form of money ever invented, it goes from being a want to a need. And we don't know what the price of Bitcoin is going to look like when there is a market for 8 billion people on Earth competing for three functions of money, are competing for that one asset. And this is where, in very simplistic terms, which is a little bit different to say that what I call the triple point asset, and I'll go into that if you want to. But in really simple terms, my look at this is, once people understand that this is the best form of money ever invented, no one will ever want to receive anything other than Bitcoin for the services rendered. Imagine, we're in Australia, imagine in the US or Australia, you turn up and try and buy things with Venezuelan bolivar. Firstly, we know it's a hyperinflating currency that's worth nothing. And secondly, you're going to look at it like, are you insulting my intelligence to think that I would accept Venezuelan bolivar over an Aussie or a US dollar? Well, the evolution will happen that, people will evolve to the understanding and education around money that, what we're trying with US dollars and Aussie dollars is effectively the same thing if Bitcoin's on the table. And I already know services around the world and basically who work in the Bitcoin space where they refuse to take fiat denominated currencies for their services because it's an insult. They understand what the function of money is and that Bitcoin is the best function of money available. And so very briefly sort of covering off on what Bitcoin is and the functions of money, to my mind, we've got, and this is where sort of applying just a logical step to the demand-supply dynamics that we see. There's roughly 6.3 trillion in global trade done on a daily basis. And look the number up, but these are the numbers that I Googled, so, go with that. There are 900 Bitcoin minted on the day. And my expectation is, given the way that the supply is coming off exchange and the demand that's about to come into the market, we're going to have the daily global trade facilitated by whatever is mined on the day. So we're going to see 6.3 trillion in global trade facilitated by the 900 Bitcoins that are minted on the day, because the rest are in cold storage, not to see the light of day, and for a whole host of other reasons. So given that, 6.3 trillion divided by 900 Bitcoin, you get to a price of about $7 billion in today's terms.
That's absolutely amazing, Peter, and I appreciate the math. It could get even more complicated than that with the halving or the subsidy halving every 210,000 blocks. That $7 billion number may even seem a little bit bearish. But before we dive in too far down the Bitcoin rabbit hole, who is Peter Dunworth and what led you down this path, mate?
A little bit about myself. I've been in and around finance for the last 2.5 decades. Studied accounting and finance at university, went into the investment side of things with BT Funds Management as a phone jockey talking about investments to their clients. Then had the good fortune of setting up a mortgage broking business and working in credit for about a 10-year period, which was a fascinating study of systems and processes and risk management, trying to avoid losses on loans. That was an eye-opener and really nice sitting on the other side of the balance sheet. And then 10 years after that, moved back to the other side of the balance sheet, basically doing investment advice and specialising in self-managed super funds, which is effectively pensions. Got an equivalent of a master's in self-managed super funds and gave advice on superannuation. And about 10 years ago, started a family office with my business partner, Juliet, who's just I feel very fortunate to be partnered with her. She's an absolute gigabrain, huge experience in the world, and very fortunate that myself and my clients get to benefit from all of her hard work and experience. So about 7 years ago, we started talking about Bitcoin as an investment option for clients in a very different capacity to how we feel about it today. And, we started off with conversations that, hey, a 1 to 2% allocation might be a good way to hedge yourself here. And if it's a catastrophic failure, you'll lose the 1 to 2%. It'll be like a bad day in the stock market. And then just recently in the last 6 months, with a number of people who you're familiar with, Jake and Andy, set up the Bitcoin Advisor to take what we learnt with my experience for family office clients for the last 7 years and apply that to the broader population and anyone in Bitcoin who wants help with collaborative custody and ensuring their legacy through estate planning and ensuring that their Bitcoins aren't lost or contributed to the network upon their death. So that's where we're at today.
You're dealing with really high net worth individuals. And there's a couple of things I want to unpack there. One of the things that really blew me away is you first turned Bitcoin down when it was $3. It's now 10,000 times more expensive. I'd consider it now, like literally it is. I'd consider it now, though, a better risk to reward at $30,000 than it was $3,000. What are your thoughts on that? And how can people wrap their heads around that? Because $30,000 is a lot of money for some people, but you're talking about a $7 billion Bitcoin. So is $30,000 the new $3 or what's this looking like, Peter?
I think it is. Firstly, thank you for the reminder of the worst financial decision I've ever made. Not a day goes by I think, I could have just bought $1,000 worth. Would have been easy. But it's a point I'm happy to discuss, and I sincerely hope that your listeners listening to this, if they don't have Bitcoin, can learn from my painful experience. And I hope this is a motivation for them to buy a little bit, something. Might be $1, might be $10, but please learn from my experiences in ignoring and dismissing Bitcoin 12 years ago when it was $3. And I could have bought some and, it would be a very different conversation today. So what I think, to your point, I absolutely agree with you that today it is a much better risk-reward situation than when it was $3. So when it was $3, we didn't know if the governments were going to shut it down. We didn't know if the tech was really robust enough to deliver on a global scale. I remember at the time, shortly after, WikiLeaks even came out and said, please donate in Bitcoin. And all of the core devs basically said, please don't put us in this position. We're not ready for, this sort of government interaction, sort of this conflict that, it was quite inflammatory to think that, their banking systems were shut down, but hey, we can take Bitcoin. And it was like, we don't really want this kind of attention. So what we've seen play out over the last, say, 12 years since that's happened, Bitcoin has proven itself to be a robust system. It hasn't had 1 second of downtime in the last 12 years. It has had more uptime than the Amazon network or Facebook. That's quite incredible. And in addition to that, there have been no rollbacks on the network. It's still an immutable ledger. No transaction has ever been denied or stopped. If you adhere to the rules of the network, then everything has run smoothly. And in addition to that, we've also seen fundamentally a 51% attack where China banned Bitcoin mining, and more than 50% of the network turned off overnight. Now, despite all of these attacks over the last 12 years, Bitcoin is still running smoothly and hasn't missed a beat. So I look at this and think there are some unknown unknowns that we don't know could attack Bitcoin. But at this point in time, Bitcoin's answered, the major questions that have been asked of it. And from that point of view, I still actually think there's more upside in front of us than behind us. And when you think about that on a risk-adjusted basis, that it's been through all of these trials and it's still working, all of a sudden that moves it up the rank of, basically it lowers the risk dramatically of this investment. And this is what really excites me, because two things. Firstly, people confuse volatility with risk. And this is, I believe, the risk-free asset of the world now. But they look at the volatility of it and think because it's volatile, it's risky. And I'm like, no, you're confusing the two. And you need to understand that this is the risk-free asset. It's just wildly volatile. But in order to get to a $7 billion valuation, you need and want that to be wildly volatile. Otherwise, it'll take 1,000 years to get to the $7 billion valuation. So the more volatile it is, the faster it gets to those sort of outrageous valuations.
Yeah, no, understood. There's probably a good way to pivot into what is the triple point asset, and then you've got something else as well, saying Bitcoin's the first quantum asset. So if you want to explain those two concepts, and then we'll dive into more of portfolio allocation, how people should think about Bitcoin that still potentially think it's magic internet money, but to be able to hedge against the financial crisis that is going on, even if they're not aware that it is happening at the moment, because it is potentially very catastrophic as well. So if you wouldn't mind jumping into triple point assets and the first quantum asset with Bitcoin.
Sure thing. So the triple point asset is a coin I term from Thermodynamics scenario where if you put an element in a beaker under specific temperatures and pressures, you can have that element in all three phases at the one time. So explaining that, under certain pressure and temperatures, if you put water in a beaker, the one beaker at the one time, you can have water, ice, and steam all in that one beaker at the one time, which sounds so surreal. Like, how is that even possible? Yeah. Well, pressure and temperature does crazy things to elements, and the triple point is basically that point of pressure and temperature where the water is in all three states at the one time. And it's really curious. It's like, well, how does this work? My recommendation, maybe we put this in the show notes, is just Google triple point water, and you can have a live demonstration of it with a guy in a beaker. It takes about 2 minutes to watch, and it's just mind-blowing to think that single element water can exist in all three states at the one time. So we'll put that in. Now, I call Bitcoin the first triple point asset because it exists in three states all at the one time. It is single-handedly the best store of value, the best mean of exchange, and the best unit of account all at the one time. And this is the first time in history that that's ever happened. And so if we take a step back, there are I believe, four tech innovations that have allowed for Bitcoin to become the first triple point asset. So if you look at why Bitcoin is a better store of value than gold, you've got two tech innovations that have happened. You've got absolute digital scarcity of 21 million coins, never to be repeated and never to be expanded. And then you've got the ability to have seizure resistant. So for the first time in history, you can die with your Bitcoin and no one else can get it. Every other property on earth can be seized by someone or a government. This is the first time you can walk around with your Bitcoin in your head, and if you want to, you can literally basically contribute that to the network so no one can benefit from it in the future. That's a wild step function change in technology and an improvement on our existing store of value, which is gold. When we look at mean of exchange, the US dollar has been the benchmark for global trade for the last 100 years. That mean of exchange, Bitcoin, I believe, is a better mean of exchange than the US dollar for two reasons. Firstly, it is censorship resistant. So no one can be denied access from sending or receiving money if they adhere to the rules of the network. Now, I'm not defending Russia and what they're going through, but I don't like the fact that the US can seize the foreign reserves of a nation without any due process. They literally have frozen $500 billion of foreign reserves, which is Russia's. Now, if they had those foreign reserves in Bitcoin, they wouldn't have a problem. But they don't. They've got it on the fiat system on the SWIFT network, so the US can basically have full control over what happens with that money. So censorship resistant is a huge upgrade to what that mean of exchange function of money is. And this is where once people understand that, they'll want to use Bitcoin as the underlying settlement currency rather than the global, the existing global money, which is the US dollar. The other thing that makes Bitcoin different to the US dollar is that the US dollar, the actual size or the amount of US dollars in existence can fluctuate daily, yearly. And, in the last, say, 3 years, we've seen the increase in the money supply go up by 40%. This is what's leading to inflation. If you ask any Bitcoiner, it's like really simple, but for some reason, the traditional economists have huge troubles putting two and two together there. And what's interesting about Bitcoin is there's an immutable supply and issuance. So we know exactly what's in the market at any one point in time, and to the minute we can verify that. It's auditable. We can independently do that without any third parties, which is a step function improvement in the mean of exchange. And then the final one, which is really boring, so I'll just touch on it briefly, but this is where a lot of the juice is. Bitcoin is the first triple entry accounting system where anyone who runs the network software can see what's happening on the network. This is the first accounting innovation we've seen since the Renaissance. So when you put all three of those improvements to money into a single asset, all of a sudden we now have one asset that is the best at all three functions of money. And this is the first time in history this has ever happened. And the best part is 99% of the population has no idea this even exists, or that's what's coming. So therein lies the opportunity, I believe.
No, awesome. We'll dive into the opportunity in a sec. Just a couple of things that I want to unpack. You said this is the first time somebody can die with their property. And you really need to think to be able to understand how profound that is. If I'm holding a bar of gold, you know, somebody can take that off me, real estate that can be confiscated, whatever it is. Like you're saying, if I'm just holding these words in my head and then I do pass or something tragic happens, that's it. That Bitcoin is almost like a donation to everyone else holding Bitcoin. And I guess the biggest thing there, what you're saying, Peter, in the last 3 years, the United States dollar, they've inflated the supply by 40%. So all the dollars in circulation throughout history has grown nearly double in the last 3 years. That's pretty insane. Bitcoin, you can't make any more. So if people are passing away with the numbers in their head, the supply of Bitcoin's going down as well at the same time that the US dollar is inflating. So it probably is going to continue to push the Bitcoin price up and to the right. So in regards to that, coming from the traditional financial world, that you've spent the time, the hours getting educated, people do need to spend about 100 hours minimum to get a basic understanding of Bitcoin. But what's a good place to be able to start when they think about their portfolios and from the framework of reducing risk? Because the world banks, the fiat system is on the edge of crisis, and people hearing that from me, someone, you know, in their mid-30s may just think, oh, this is some crazy kid jumping up about Bitcoin. But you've spent over 30 years in the traditional financial markets. So how would you explain it to someone maybe of your demographic, that a little bit older generation that doesn't have the time to take risk on, but needs to be able to protect themselves for what could potentially be a catastrophic collapse?
I think it's about looking at what are the opportunity costs of investing in Bitcoin relative to what you're currently invested in. And this is where everyone will come up and make their own weighting to that decision. I think it's really important to look at what are the opportunities in front of us. And as we have this conversation, it's the 11th of August, 2023. We've had, and I don't say this lightly, but we have had a horrible performance in the bond market in the last 12 months. And that's because the Federal Reserve has raised interest rates dramatically. That is effectively the risk-free rate of the world, which sets the value and how we value all other assets. So with the risk-free rate going from 0% to 5%, all of a sudden there needs to be a re-rating downwards of all other assets relative to that. Because now for the first time in 10 years or more, we've got the ability to go to the bank and actually, you know, the Federal Reserve or Treasuries and get 5% on our money. So when the rates have gone up this quickly, it also represents a huge problem for the future returns. And what we're seeing is that when interest rates go up so quickly, all of a sudden treasuries look very appealing. And not that I want to invest in long-term treasuries, but short-term treasuries, overnight treasuries at 5% look really good because there's no duration risk with them and you can get 5% on your money and you're not going to be there forever. But short-term, that's, you know, gives you peace of mind. But you look at when rates have gone from 0 to 5% and the asset values haven't adjusted accordingly downwards, and by asset values, I mean typically real estate, because real estate's the most heavily indebted asset that we have. And, you know, sadly for most Australians, it's our largest investment. It's typically our home is our largest investment. And, you know, I can speak for, you know, the majority of my clients that they hold huge property portfolios. Now, with the cost of money going from, you know, sub 2% to plus 6%, all of a sudden holding those properties becomes very expensive. Before they could get a positive carry on holding real estate, now they're going to have to pay money to hold it. So what does that do to property values? To me, one thing needs to happen. We either need to have a drop in property values to adjust for or increasing the yield, or alternatively, the interest rates need to drop dramatically to restore the yield premium that's paid on a property v for your risk-free asset. Now, what that means for the capital growth outlook for property for the next few years is I think it's going to be, obviously there's different markets have different profiles or outlooks, but, generally speaking, it's going to be very tough to make money in property in the next few years because there should be an adjustment downwards of either the interest rate or the property values. And I don't see interest rates coming down anytime soon. So I could be completely wrong on this. And this is where, it's important to check back every day on what's happening because, economists do a shocking job of picking the future. But I just have very little faith in what's coming down the road from a property investment perspective. Now, you look at stocks, what's available in stocks? Well, you break down stocks into two types of investments. It's typically growth stocks or value stocks. The last 12 months, growth stocks, or 18 months really, growth stocks have been absolutely hammered and value stocks have performed really well. And I look at this and I think, well, we've now got a normalization of the interest rates. They're not going up vertically, so the interest rates are flattening out, which means the growth stock should start to perform better. And we've seen a really good start to the year in growth stocks. But value stocks have performed really well with these rising interest rates. And what's really curious to me is that in 2010, something really curious changed in the dynamics of growth stocks v value stocks. And what happened in 2010 was you basically had a flip of tech stocks went from being basically capital intensive, or growth stocks went from being capital intensive to effectively being cash accretive. So what that means is they basically started storing cash because they increased their revenues and they had no additional cost per marginal unit. So as Google got more and more revenue on, they just put on a few server farms and their revenues went exponential, but their costs only went up gradually. So all of a sudden they had these expanding margins and they were very cash accretive. They made a fortune. Now they were considered growth stocks. So what's interesting is that typically growth stocks were used a large amount of working capital and debt in order to fund their growth. And the technology from 2010 onwards basically meant, because they've got zero marginal additional cost per unit, meant they were cash accretive. So they'd make a fortune and they didn't have to take on debt. So all of a sudden, all these growth stocks in technology have very little debt. You look at the major cash balances of the S&P 500, Microsoft, Facebook, Google, basically all the big tech companies have got stacks of cash. Yeah. And the value stocks in the S&P 500 have got huge amounts of debt, huge amounts of working capital, and large amounts of corporate bonds out. Now, in a rising interest rate environment, I would think that the value stocks are under greater pressure than the growth stocks. But if you look at the share price, that hasn't happened yet. What you've seen is a compression of the price earnings multiple, where typical tech stocks went from 30 down to, maybe 40 down to 20, so they halved in value, whereas the value stocks didn't have a PE compression. But what I think is about to happen with interest rates where they are is they're going to have to meet the commitments on this excessive debt that they're holding, and there's going to be a crunch in the value stocks. So I look at the outlook and I'm like, okay, well, property's a tough place to be if I'm looking and trying to forecast for the next 5 or 10 years. Unless you can find some really exquisite opportunities that just can't be passed up, it's hard to invest capital on a long-term basis. And property typically has, 5% on cost just to purchase it, and then there's land taxes to hold it. There's a whole host of things that I'm looking at thinking, this is really hard to get excited about from an investment perspective on a long-term basis. I look at the share market and think, we're in a really rough patch at the moment. It's the most difficult time to be an investor. And then I look at Bitcoin and compare those opportunity costs to Bitcoin. I think, wow, if you can get comfortable with it, if you can sleep at night, or if you've done the work on understanding Bitcoin, a 2 to 5% allocation can dramatically reduce your risk. It gives you an outside the system hedge that's not in the system. And it could potentially put you in a very different position over the next 10 years if you just buy and hold it and secure it properly. So I look at this and think, to your point earlier, it is a much better value proposition investing in Bitcoin today than it was 12 years ago.
Cool. I guess having you on, Peter, because you came from the traditional financial space and then talking about Bitcoin and talking to really high net worth individuals, 2 to 5% for the average person going into Bitcoin, you said that can reduce the risk. they probably feel like that's very risky. Just a full caveat for everyone watching, I'm about 95% of my liquid net worth in Bitcoin. I'm not saying that's responsible. I've put in the hours. I understand the risk that I'm taking on. But Peter, for someone that thinks potentially 2 to 5% is a little bit risky, what would your counter argument be? How can that actually reduce the risk of somebody's portfolio with the exposure to everything else?
I think on a number of ways. Firstly, it's an investment that is outside the system. So just like holding gold is an investment outside the system, although fundamentally it's not what it used to be. The futures market basically manipulates the price of the gold bar that you can sell. So I don't think the gold bar, the actual physical gold bar, is the investment that it used to be. And I think Bitcoin is effectively the new gold bar. It's a better gold bar. It's instantly transferable globally. It's digital. I can store it in my head. I don't have to turn up to the physical location to deposit my Bitcoin in that vault. I can send it from my telephone. There are a lot of benefits to that. And I look at that and I think if you understand the promise or the premise of gold, then having a small allocation to Bitcoin seems like a logical thing to do. And it is completely outside the financial system.
Yeah, I think that is a little bit hard to grasp, but if people can walk away with, it's just digital gold, it's a superior form of gold, and it's scarcer than gold. If you can take that and do the research around that, I think that'd be very beneficial. We're talking about holding these words in your head. There's 24 words back up your Bitcoin or give you access. They're like your password or your keys, your lockbox. At the Bitcoin Advisor, you sort of help high net worth individuals. I've talked to other people that deal with high net worth individuals, around $10 million, $100 million net worth. So people with a lot of money doing it, if they're going to put 2 to 5% of their, of $100 million into Bitcoin, they're probably not going to hold 24 words in their head and hope that that's going to go to the next generation and the generation after that. So you've got the Bitcoin Advisor, you've teamed up with Jake Woodhouse and Andy. Do you want to dive into what solution that you've brought to the market and maybe potentially why it's really needed right now? Why just come together and form a company?
Thank you. On that, I think people don't want to walk around with 12 words in their head, and I don't think that's a good risk mitigation strategy for holding your Bitcoin. Although it's cute to think about, I don't think that's a viable solution for a meaningful amount of wealth. If you're prepared to lose it, then sure. One of the problems that I've looked at for the last 7 years is how to secure the families that we advise on. How do we secure their Bitcoin in a way that provides multiple redundancies, but it doesn't stray from the premise of not your keys, not your coins. And this is where we work with a number of different software providers, Unchained, Casa, Nunchuck, who are effectively multi-sig providers of software. And what we do is we leverage off the systems that they build to basically deliver a client a collaborative custody solution that gives them multiple backups if something were to happen to them. So my primary concern for my clients is to make sure that their Bitcoin is secured, and that if something were to happen to them tomorrow, they are not going to lose their Bitcoin, and their beneficiaries, their family, their wives, their children, are not going to lose access to that Bitcoin. So in order to do that, how we do it is basically through a collaborative custody arrangement whereby the software provider holds a key, the client holds a key, so we set up a hardware device for them. They are holding a key to their multi-sig vault, and then we hold a redundant key, the third key for that account. And what that enables the client to do is that if they literally lose everything we do for them in setting up the hardware wallet and the seed words and everything else, if they lose all of that, not that we would advise them to, but if they were to, if they're in a single sig arrangement, they would lose completely their Bitcoin. However, under a collaborative custody arrangement, there's the ability to replace their key and have the software provider and ourselves sign a transaction to move it to a new vault with a new key so we don't lose that Bitcoin. And as crazy as it sounds, thinking someone would actually lose their device and their seed words, I've had this happen on 2 different occasions. So it happens. And this is where I can report in good faith that we're able to recover all of those Bitcoins that the clients thought were lost. So they called us and said, hey, I've lost these words. I know you told me it was really important, but I've lost it. Have I lost my Bitcoin? And thankfully, under that structure and the protocol, we were able to recover all of those Bitcoins. They haven't lost a single Bitcoin, and we're good to go. So I had a very amusing conversation with a client that said, "Oh, I'm so grateful to hear that. If my wife knew I'd lost the Bitcoin, I'd be getting a divorce." So it was a substantial amount of Bitcoin.
That's a very scary thought, and when you dive into Bitcoin for the first time, it does take a little while to understand that if you've got a single signature, there's a lot of risk that you're taking on, especially if you want to self-custody. I just want to say, if you are a high net worth individual, I've put all the links for Peter and the Bitcoin advisor. You can talk to Peter, Andy, Jake below, and also Sean said hello. But just have a conversation with someone that understands it. If you do have a lot of money, Bitcoin can protect your fiat, like your currency, dollars, and your risk, but you have to put things in place and just follow the correct steps and not get caught with scams. So obviously Peter's here, he's got his face, he's docked Australian registered company. So I assume you're registered with ASIC, as in there's probably a whole lot of other governing bodies here within Australia as well that protect the consumers with what you guys are doing. But I guess a question with that is, if someone knows a little bit and then they hear that you and Unchained have their keys, how can they be rest assured that you two aren't going to collude and take away their Bitcoin?
It's a great question. Very simply, we don't have access to clients' accounts. So we are not in the position to log into clients' accounts. Even if we were in the position that we knew clients' username and password, which we often are in that situation, every account that we set up with Unchained or CASA or anyone else has two-factor authentication. So we have Google Authenticators, which is another security protocol that is in addition to a username and password. So that's just to get access to the account. And then to actually create a transaction, every transaction that gets created on system gets emailed to the client. So the client will be getting email alerts from the software provider saying, hey, you're setting up a transaction. And then one thing that I find, and particularly experienced with the Unchained system, one of the great security protocols that they work with, that if you ask Unchained to sign a transaction, you're required to provide a video of yourself. And sadly, being a big bald bloke with glasses and blue eyes precludes me from looking like a lot of people. So there is that benefit. In addition to that, they have a 3-day delay on signing any transaction, and we have a delay on our side of things signing a transaction. So a lot of things need to happen, and I personally don't think it's possible in the way that we've structured that. And the other thing that I think is important to note, that we have a vested interest in making sure we have a perfect track record on this, and so too does Unchained. Unchained's a multi-million-dollar business. I've got a reputation of having a squeaky clean record for the last 20 or 25 years in business. So I like the people in Bitcoin. I want to be here for a long time and want to make sure we honour everything that can be done. And we've set up the protocol in a way that it excludes any opportunity to do that. And this is where I welcome anyone to walk through the process and actually see how it works, because what we find is there are a number of questions up front, and rightly so. One of the premises of Bitcoiners is to don't trust, verify. And this is where walking through that process with us, and we might put literally 0.0001 of a Bitcoin in this process to show you how it works, and actually going through and seeing how it works gives a very clear understanding that there's no opportunity to do that, and gives the peace of mind to know that, hey, and this is the fundamental promise that we make to clients, if something happens to you tomorrow and you get hit by a bus or whatever it might be, as dark as that is to think about, we are able to recover your Bitcoin for your estate, for your wife, for your children. and you will not be losing your Bitcoin. And that is the primary concern of this business, because it's something that I've thought about a lot, and I've stared at this problem for a long time and needed to solve that problem for myself, because I have a wife and children and I have a large amount of my net assets tied up in Bitcoin. So I don't, selfishly, I don't want to make a contribution to the network. I prefer to contribute to my immediate family and have them benefit from it. So part of developing that protocol is to solve a problem for myself first, and then give that protocol to the world, because I think it's an invaluable thing for two reasons. Firstly, Bitcoiners do a huge amount of work to get to this point in time, and to lose your Bitcoins upon your death feels like dropping the ball over the line in a game of footy, right? It just feels like, oh my goodness, imagine, well, you're dead, so you don't have to worry about it, but imagine what your family thinks after, having to deal with all the concerns and fears and FUD that, your family throw at you for 10 years to think they didn't end up with it, but you were right. It's like, it's heartbreaking to think that happened. So for us, solving that problem of getting hit by a bus is a big, big deal. And to anyone thinking about estate planning protocols for themselves, probably the only question I can ask you, which might be a little daunting or confronting, is on a single piece of paper, write down and hand it to your nearest loved one, please move my Bitcoin, and hand it to whoever's looking after you, whoever your estate plan protocol is. Hand that to them and see if they can actually move your Bitcoin. And if they can't move your Bitcoin, access it, or show you that they can do it, then there's a fundamental flaw in your estate plan protocol for your Bitcoins. So it'd be worth considering how to solve that.
Yeah, no, I think that's a very valid point. So for everyone watching, if you've got a lot of money, basically, or even just getting new and you want to talk to someone that understands both traditional and the Bitcoin world, you can reach out to Peter. So Peter, time locking in regards to Bitcoin is a pretty interesting concept. And why would governments be forced potentially to back fiat funds buy Bitcoin and use this time locking feature?
I think it is a fundamental degradation of trust. The purchasers of their bonds don't believe they're good for it anymore. So they're going to have to back their bonds with something. They can back it with gold. However, you still have a problem that if a government backs it with gold, say 2 to 5% of a bond that they raise, they're going to pay you that in today's value of gold in the future. They can do that. But there is a very serious problem around, firstly, do they have the gold? What happens when you go to claim the gold, and how do you know it's even going to be there? There's no way to verify the gold that is there. So I look at this and I think, well, a much simpler, easy way of backing these government bonds with value is going to be time locking Bitcoin. So you could literally raise, call it $100 billion worth of bonds, government bonds that they issue, and they say we're backing it with 5% in Bitcoin in today's value. They go and buy $5 billion worth of Bitcoin, take that off the market, time lock it for 30 years, whatever the bond duration is, might be 5, might be 10, might be 30 years. And that 5% Bitcoin is literally linked to a wallet 30 years in the future when that bond expires. So that bond is going to basically have 5% of its value, $5 billion worth of bonds over the next 30 years could accrue in value exponentially. And that bondholder all of a sudden gets exposure to, and if they're holding the bond on expiration, they'll take whatever that 5% of Bitcoin is worth in today's dollars 30 years into the future. So this is another way that a huge amount of Bitcoin is going to draw off exchanges and sit outside of the supply. So I think it's a way of reinstating trust across all of our government institutions. And it's a very simple way for us to be sure that we can verify they've said what they're going to do, because we can check it on-chain, and there's no way of fudging the on-chain numbers.
Yep. So they're sending Bitcoin into the future and it can't be accessed now. Is this technology currently possible, and has anyone done any trials with this or in regards to time locking Bitcoin?
Yes, this is available now. So you can time lock Bitcoin and send it to the future. At the moment, it's a little bit clunky and not user-friendly, but my brother did an experiment with this, and he sent a Bitcoin to the year 2144, so 121 years into the future. He also wrote an article which you might like to reference in the show notes. He basically sent a Bitcoin to the year 2144, and he left the private key in the article. So the article is a Bitcoin magazine article called "Bitcoin is Time Traveling Energy." Not only did he send the Bitcoin to the future, he provided the private key for that wallet in the article. So you can access the private key, and if you're able to break the time lock, there's an entire Bitcoin sitting in that wallet for you.
Wow.
But because of the way that time lock's constructed, even if you have the private key, you're unable to break that and get that Bitcoin. But if someone does it, we'll be able to see it on chain. So basically over to the Bitcoin core devs to try and crack that time lock. There's a Bitcoin waiting for you.
That's absolutely amazing. And I guess the incentive structure that's set up with Bitcoin, for people that are just hearing about Bitcoin for the first, the second, or the third time, there's so much to wrap your head around. It uses a lot of energy. It's got the world's biggest computer network behind it. All of these things are essential. They're all a bonus. The energy, a lot of the information around the energy is the energy consumption of Bitcoin's bad. It's you know, 3 times higher in usage of renewables than any other industry, at 60% instead of 20% on average. So keep those things in mind. But what I guess at the start we're talking about Bitcoin as sound money. It's been perfectly engineered to be the greatest form of money that's ever existed. Now we're talking about these things about sending money in there, and your brother, like putting 1 Bitcoin on there, I'm not sure at the price he got Bitcoin, but in today's value, $30,000 US, he's locked up. People now have an incentive case to be able to try unlock or break that time lock. And, you know, after the halving, if Bitcoin is whatever price it is, you know, 6 figures, 7 figures, there's going to be even more of an incentive, and we're going to be able to see how all this works and plays out. One of the things, Peter, that you said is it's clunky technology. The user interface or the user experience of Bitcoin in general, even in the last couple of years since I got in 2019, has gotten a lot better. What you guys are doing is a really nice add-on to the Bitcoin ecosystem as well. Where do you see the industry heading with the way that the world is heading, I guess, financially at the moment? What do you see? What further innovations do we need for massive onboarding and innovation?
I think personally, the collaborative custody is a way to move the needle from, say, 0.1% adoption in self-custody to 10%. I think that is a huge innovation that is only going to get better. I've been privy to some new multi-sig providers that are introducing some really interesting tech that makes it so easy to use. The user experience looks, feels so much more native to being digital, whereas at the moment it's a little bit clunky having hardware devices and plugging them in and protocols, and you know there's so much learning that goes into that, whereas you know the multi-sigs of the future I think are just effectively going to be device driven. You know, by device driven I mean literally laptop or you know a phone, alternatively an iPad or a tablet, and it'll just be completely seamless. But for the time being we have we've got to work with what we've got. And one of the things that I see and this is maybe a little bit cynical or skeptical. I basically move, when it comes to Bitcoin and the security protocols that we implement, I like to have the oldest, dumbest, most tested tech available. And this is where for a lot of the integrations and improvements that are coming to multi-sig to make the customer experience much better. For me, as wonderful as it is, and I want to see it and support it, I'm still going to be skeptical of it. I want to see it proven out over multiple years before we invest, enormous amounts of capital and put large amounts of Bitcoin onto such protocols. So it is getting better. You look at how the phone's evolved in the last 20 years. 20 years ago we didn't have an iPhone. Now smartphones are ubiquitous across literally the entire world. So the experience is getting better. Once that is, self-custody obviously be a lot easier, but there's a whole host of services building out as well, which I think makes it far more appealing.
Yeah, absolutely. So we've talked a lot in the show. $7 billion Bitcoin, we started off with that. We've gone into time locking Bitcoin. And a little bit about storing generational wealth, what you guys are doing at the Bitcoin Advisor. One thing that I find very interesting that you've brought up before is element zero. What is element zero? And you want to dive into that one for us, Peter?
I love this. It's a shout out to Knut and his work in everything divided by 21 million. He looks at Bitcoin as being a not an invention but a discovery. It's effectively the discovery of element zero with basically no atomic weight, because Bitcoin is fundamentally information, so there's no atomic weight to it. So on the elemental chart, it is zero, hence the term element zero. And one of the discussions I had with Knut about time locking your Bitcoin, he came up with this while we were having a chat. I said, hey, have you talked about time locking? Like, have you looked into this? He goes, yeah, but I haven't touched it in 3 years, because time locking's been around for a long time. It's like, it's BIP 65. So like it's been around for, I want to say 3, 4, maybe 5 years. But it just hasn't picked up. It's had no love. No one really cares about it. It's like, it's a kind of silly, not a silly function, but it's like no one's really plowed a lot of time, energy, or resources into it. And this is where I think if they understand what some of the implications are for the finance sector, then this changes everything. And back to the story about Knut, I was on a phone call with him having a chat about this time locking, and he's like, oh my goodness, I've just figured out something. I'm like, what'd you figure out? And he goes, Bitcoin is element zero at absolute zero when you time lock it. So when you time lock your Bitcoin, absolute zero represents the temperature, basically the coldest temperature in the universe. You cannot get any colder than negative 273 degrees. So at that temperature, basically particles stop moving. It's the coldest of cold storage. And this is his application to element zero at absolute zero. All of a sudden, time locking has the ability to provide a whole host of security features and functions that we never dreamed possible with traditional hardware storage or multi-sig storage. It adds another layer of dimension to the security of protecting from a whole host of different attack vectors. And so one of the attack vectors that I look at that time locking helps protect from, as sort of out there as this is, but when you time lock a Bitcoin, it ends up basically moving the Bitcoin from this wallet to that wallet, and it basically isn't in this wallet and it's not in that wallet until the block height's reached. So let's just say we live in a universe where Riemann's hypothesis is solved and the twin prime conjecture is solved, which is basically the prime number theorems that need to be solved in order to crack SHA-256 and basically every other encryption service or security protocol that we use. If those two are basically solved for and SHA-256 is broken, what this means is that any Bitcoin wallet can then effectively be hacked. So Satoshi's wallet, the million Bitcoin sitting there, can be hacked. Coinbase's wallet of 2 million or whatever it is can be hacked. Grayscale, 650,000 Bitcoin can be hacked. But if you time lock your Bitcoin to a certain point in time in the future, that Bitcoin is effectively sitting in a suspended state, like a superposition in quantum computing. It's neither here nor there. It's basically Schrodinger's Bitcoin. So it's not in this wallet and it's not in that wallet until that certain block height's reached. Wow. So it actually adds another layer of dimension to security that even if you break SHA-256, you can't steal that Bitcoin in a suspended state until that block height is reached. So I find it really curious, and this is something I talk a lot about with my brother, but these are sort of the security protocols coming down the line that we couldn't even dream of, and we can't do with any other asset. So I think once people understand, some of the security protocols and benefits of this, as well as being the world's greatest asset ever invented, the best function of money, like best store of value, mean of exchange, unit of account, first triple point asset, first quantum asset, like all of a sudden, the opportunities, for smarter minds than mine to introduce new products and services to market is going to completely redefine society.
I think it's a very exciting time, and that time lock in element zero, I think we're going to, maybe it takes another 5 or 10 years, but we're going to see huge adoption, like you were saying, government bonds, but large corporations, MicroStrategy, for example, holding all that Bitcoin on their balance sheet. If they send it into the future, they've just got a little bit more peace of mind. But investors that are then investing in MicroStrategy, for example, have more peace of mind that that Bitcoin's not going to be sold off or moved, or nothing's going to happen if the network gets hacked. So that's very, very exciting. What message would you like to leave people with? Bitcoin's very complicated, and I understand there's a lot of information we have gone through for people to disseminate, but what's a simple takeaway you'd like to leave everyone with today?
I think for those who don't have Bitcoin, I would strongly urge you to buy some, whatever that looks like, whatever you can sleep at night holding. I would strongly urge you to do that. If that represents $100, then buy $100. If it represents $1,000 or $1 million or $10 million, then do that too. Just get off zero, I think, is the most important thing. And then I urge you to learn as much about this as possible. For me, this is the first investment that I've spent, thousands of hours looking at, and every hour I spend learning about it, it gets more compelling, not less compelling. So I think it's really important, and your future might, be determined by how well you understand this. So if I can just leave a passing message, please buy some. And for those who are already here, which, predominantly the bulk of the audience here, please do everything you can to ensure that you protect it, not only for yourself, but, leave a legacy. We're, the first generation to experience Bitcoin, and we have the opportunity to literally set up, tens, if not hundreds of generations into the future if we do this right. So please give it the care and attention that it deserves, for maybe not for you, but future generations. There's a huge opportunity in front of us.
Peter, it's been such an absolute pleasure. Everyone watching, if you want to be able to talk to this man, his link's below, the Bitcoin Advisor. If you want to check out that video that I did with his business partner and co-founder, Jake, check that out. We're going to have Andy on the show as well. Peter, you're a bloody legend in the space. Thanks so much. Enjoy the videos as they pop up. Have a beautiful day. Peace.